How's it going out there? Welcome to Stock Talk with Mike. Today, I'm going to be talking about Jumia Technologies and cover some new material that I've stumbled across recently, as well as a negative article that actually made me more bullish on Jumia for the long term. And if you like this kind of content, please consider subscribing to the channel and liking this video. All right, stay tuned. I want to cover this article that came out by a Motley Fool writer on January 17th. Titled 2 Reasons to Avoid Jumia Stock. And just backing up on that, I'm really drawn, when I'm long a company, a long-term investor in a company, I actually am drawn to the negative articles. I love hearing the other side of the story and diving deeper into it and ensuring I have no rocks unturned. I know some people hate hearing the negative when they like a company. They just want to cheer it on and they're blocking people in the forums or whatnot. I personally love hearing it, and I think it can be of value to hear the negative side and actually help you with your thesis around a company. But so the number one reason they gave here, so 2 reasons they gave, is underwhelming financials and still priced to perfection. So he goes on to say here, the first 9 months of 2020 were challenging for the company. Its total revenue fell 11.9% year over year to 97.9 million euros, so $119 million, driven mainly by 47% drop in its first-party revenue. Sales made directly by the company. Gross merchandise value for the company declined 18% over the same period as well. And then to be fair, it goes on to say, to be fair, the company has been pulling back on gross spending in order to more quickly achieve profitability. This isn't totally quite accurate here. Jumia certainly deserves credit for its operating margin improving from negative 150 to negative 111. So they haven't moved away from growth spending. I'm not even sure exactly what that means, growth spending, because they purposely shifted their business as they were bleeding cash, their direct sale of a lot of goods. So they're not totally getting rid of first-party selling. They're just focusing on very high margin items that they can sell profitably, and getting away from other items that weren't. And just it was a sound business decision as they want to focus on an asset-light model. And I talked about this in my last video as well. But if you look at their Q3, their marketplace revenue actually was up year over year of the 9 months, 26%. The marketplace is where they're selling third parties products. So it was up. So I don't know about stop investing in their growth. They're still growing there. Where they shrunk significantly in the 9 months, this 47% decline, was in first-party revenue, which was, they did not have a clear path to profitability selling these first-party goods. So I think it's a company that's learning, it's adapting. What we want to see is that marketplace revenue continue to increase. So I'm not too worried about that, about a revenue line decreasing when it's a significant improvement to the bottom line to see that revenue decreasing. I don't think it's gain revenue at any cost with no path to profitability is the path forward for Jumia. So disagree with that completely. And if you look, they actually alluded to this in his article, that their operating loss actually decreased by 34%, and largely as a result of cutting the bleeding, reducing first-party merchandise selling. So quite interesting. And the first note below their income statement in their Q3 is first-party revenue decreased by 53% in the third quarter of 2020 compared to the third quarter of 2019. This was in line with our strategy to undertake fewer sales on a first-party basis as we focus on running an asset-light marketplace model where third-party sellers offer consumers an expanding range of products and services. So again, anyone that's been following Jumia, listening to the conference calls, knows that this is a planned approach. This isn't a failure. It's not like they were trying to continue to maintain or grow this first-party revenue. So I wouldn't say they stopped investing in growth. I mean, the area of focus is still their marketplace for third-party sellers grew at a rate of 26%. So really not bad. And their non-platform revenue was up 86%. So their other revenue streams are doing great, where they're focusing their attention right now. All right, number 2 reason why this writer thinks you should stay away from Jumia. And this one, I feel like it's a piece of work. And this is what actually made me even more bullish on Jumia when I read this. It's quite interesting. So it goes on to state, Jumia's growth prospects may not be so easy. As of 2020, the African continent boasted a 39.3% internet usage rate. As an e-commerce platform, Jumia relies on broad internet usage rates in order to capture consumption from the entire population it's serving. And 39% is low across all of Africa, 39%. So bear with me here. He goes on to reference the recently gone public Russian e-commerce company, which I'd like to do a bit of a deeper dive into as well. Ozon, which again, for comparison, it's Russia-based. Their internet penetration is 83%. I'm kind of like, okay, because if you look at some of the other information here, let's see here. And I went through this a little bit in my previous presentation as well. So yeah, internet penetration is only 39 point some odd %. But you got to remember, Africa as a whole, and he's referencing Africa as a whole, is a 1.3 billion population. And it's the fastest growing continent in the world. And it does have, so the pure numbers, it has 523 million internet users, right? Russia, that he compares it to, and is 85% internet penetration, has a population of 144 million, and it's shrinking. So it's a decreasing population. I don't know what kind of case he's trying to make here. So there's 120 million internet users. If you want to use these granular numbers, there's 120 million internet users in Russia, 523 million in Africa. And even more than that, Jumia doesn't operate in all of Africa, and all of Africa is definitely not created equally. They have been strategic about pulling out of countries within Africa where they were having difficult adoption and really focusing on the areas that are ready for e-commerce. And as other countries continue to develop, I'm sure they'll come online as well. But in the countries, the 11 countries that they operate in Africa have a population still of about 600 million. So still massive. And, 3 or 4 times that of all of Russia. And it counts, those 11 countries, so in orange here, account for 70% of the internet users in Africa. So it's definitely where people are connected. So if you look at the internet adoption in the countries that Jumia is actually in, it's 61% of the population in those countries, a lot higher than 39%. And it's still 366 million users in those areas. So pretty crazy. And when you talk about 39% internet adoption across Africa, it was only 13% 10 years ago. So I loved investing in disruptive companies. I loved investing in companies that are, again, can ride tailwinds into growing areas. And we're talking about e-commerce, which is growing globally. And we're talking about a country that's growing rapidly, coming online, and I just feel like is going to continue to grow. I'm thinking 20 years out, Jumia is going to have a lot more opportunity than it does today. Just massive, as the more internet users come online, as their population grows. Versus Russia's 144 million population that is declining. I'm not too concerned that they have an 85% internet usage rate. So very, very, very interesting choice to knock against Jumia as one of your key points here. And I think makes me actually more bullish at Jumia. As I mentioned in a previous video, I'm a long-term shareholder at Jumia, and something I like to do with any of the companies I hold, or any companies even that I'm interested in buying, is periodically look at the 13F filings to see what institutions are doing. What are money managers doing? Are they buying or selling the stock that I'm holding, or one that I want to buy? So if you're not aware, a 13F is something that is required by the SEC for money managers that manage over $100 million in assets. They're actually required to file these quarterly. And it gives you insights basically into the buying and selling of these institutions. So you can get a sense of where that sort of big money is going and where it's flooding out of as well. And so one of the sites I like to use is Whale Wisdom. And they do like so if I've run a report here for Jumia, and you can see they kind of summarize it into a summary here. And you can see the last quarter, just what the general trend has been in Q3. Funds holding Jumia has gone up to 91. Previous quarter, it was only 69. So even though we've seen the share price obviously shoot up quite a bit in the quarter, more institutions are now holding Jumia. So that's pretty bullish. There are 41 new positions versus just 27 the quarter previously. So, and 25 have actually increased their size of their position versus just 16 did that in the previous quarter. Granted, 15 have closed a position and only 6 closed a position the prior. So those are, institutions taking profits. But what I like to see, there's more new position and increase in positions than there is closed positions. So pretty net positive, pretty net bullish sign here for Jumia. And if you continue to scroll down, you can actually look at the individual institutions that are buying and selling. One of real note here, this Bailey Gifford and Company, they now hold, well, at least in Q3, so there's always a bit of a delay here, but in Q3, they're actually holding 26,873,119 shares of Jumia. So over $1 billion of Jumia and 0.7% of all their assets. And they actually in the quarter increased their position to get there by almost double. So they increased their share change was 17,855,619 shares. They now hold 30% of all outstanding shares of Jumia. So pretty incredible. So they've been buying it aggressively, even as it's gone up. Notably, just above it, Millicom International Cellular actually had a significant position close in Jumia. They actually sold and closed their entire position with 9,638,000. So that's a big, significant position to close, but it's still, almost just half of the new position that Bailey Gifford took. So still really just a net positive for Jumia. All right, some more good news, I think, for Jumia. I didn't mention this in my last video, so this was actually released back in December, but I guess I was sleeping at the wheel, I didn't see this. But this might give us, I like looking at these kind of reports or news releases that might give us some insights into the next quarter release. So I think this might show up in Q4, so I'll be interested to see. Just some of their Black Friday results, which were quite positive. So they reported in this news release that in 2020, Black Friday, they had 113 million site visits versus in 2019, that was only 100 million. So a decent increase. And page views were up to 1.5 billion versus just 1 billion in 2019. And their Black Friday videos on their site were up to 99 million this past year versus just 33 million a year prior. So they are getting more engagement, at least on Black Friday. It's good to see. And like I said, I think this will hopefully show up in Q4. They had more than 41,500 sellers use their platform to reach millions of customers. That's big as they're really focusing now on third-party sellers. So that's good to see. And 141% year-over-year growth on the number of items sold from top 20 sellers during the event. So that's huge. And interestingly here, as far as their efficiency, so they've got a lot of flack over, packages taking a long time to deliver, logistical challenges, packages not being delivered at all. But for Black Friday, they had 4.8 million packages handled, and 55% of those were received in less than 24 hours. So that's pretty incredible. In 2019, I went and looked up those numbers. They only handled 3 million packages, so significantly less on Black Friday, and only 33% of those were delivered in less than 24 hours. So I think reading between the lines here, I'm expecting some better things in Q4, more efficiencies, and continued growth in their third-party sellers. So that's pretty positive. And Jumia Pay growth for the use of the transactions when they're buying on Jumia was up 55% versus Black Friday 2019. So it's good to see that continued adoption of Jumia. And as I mentioned, I think this gives some good insight into what we can expect as far as the numbers from Q4. I don't know if I'm considering blow off top, given that they're continuing to shift away from selling products directly and focusing more on third-party sellers. but I think you're going to see that number, the third-party sellers number, continue to trend in the right direction as it did in Q3 as well. I did do a bit of a deeper dive video on Jumia that you can view right here that kind of goes into why I like it for the long term. But that's all I have for you today, just a little bit of an update and another tool you can use for keeping on top of the companies you're interested in or that you actually hold is you got to keep doing that homework, and looking at those 13F filings can either add to your conviction or make you start to dig deeper into any underlying issues you might see for companies that you hold. But that's all I have for you today. Thanks for watching. Happy investing.